Welcome back, traders. Let's take a detailed look at the gold market, that's XAU/USD, as we head into the next trading sessions. We'll analyze the recent price behavior, short-term trends, and projected levels for the upcoming weekend. Right now, gold is trading near $4,002 per ounce, showing a decline of roughly 0.54% for the session. The market is currently consolidating after a period of both sharp selling pressure and modest recoveries. 1. Current market context. Over the last few sessions, we've seen gold move between a tight range of $3,985 to $4,020 on the 15-minute chart. This reflects a temporary indecision among traders. The recent candles show alternating red and green bars. That's evidence of intraday volatility and lack of a strong directional move. The sell signals you see above the price zone reflect short-term bearish pressure, while the buy signals at the lower boundaries suggest active buying interest around support levels. Overall, the market is in a short-term corrective phase following a strong upward rally seen earlier in the week. 2. Technical structure. Let's talk about the technical setup visible on the chart. The red cloud zone above the candles marks resistance. This area has repeatedly rejected price rallies, and sellers have been defending it around $4,005 to $4,010. On the other hand, the green cloud zone below acts as short-term support, with buyers stepping in around $3,980 to $3,985. These zones form a micro range, and whichever side breaks first will define the next $200 to $300 move. Currently, the structure is hinting at a potential breakout pattern, and gold seems to be coiling for its next leg, possibly during the next active trading session on Saturday. 3. Momentum and indicators. Momentum has slowed down, but it's not turning entirely bearish yet. The candles are shrinking, showing that traders are waiting for confirmation before taking major positions. We can also observe that after every sell signal, gold has been finding support fairly quickly. That suggests buyers are quietly accumulating near the lower levels rather than exiting. If we look deeper into the volume dynamics, price behavior shows a buildup near $3,995, which often precedes a directional breakout. 4. Fundamental backdrop. Now, fundamentally, gold continues to be influenced by three major factors. The US dollar strength. Any pullback in the dollar index could support gold prices. U.S. interest rate expectations. With the Federal Reserve maintaining a cautious tone, traders are watching every signal for dovish commentary. Geopolitical uncertainty and Middle East tensions. These keep gold attractive as a safe haven asset. Despite some short-term weakness, overall sentiment for gold remains moderately bullish heading into the next week, particularly if the Fed signals any softness in rate policy or if inflation data remains under control. 5. Expected move by next Saturday. Now let's talk about the next probable move heading into Saturday's session. If gold maintains support above $3,980, we can expect a rebound back toward $4,020, followed by an extension toward $4,045 and possibly $4,080. However, if the price breaks below $3,975, it could trigger short-term selling toward $3,950, and in extreme cases, a retest near $3,920. For Saturday, the expected volatility zone should remain between $3,950 and $3,950, $4,080. Traders should watch the breakout above $4,010 or a breakdown below $3,975 for confirmation of the next leg. 6. Buy and sell strategy. Let's break this down into actionable strategy levels for active traders. Buy. Setup. Entry zone between $3,985 and $3,990. Stop loss. Below $3,970. Targets: $4,020, $4,045, and $4,080. Trade logic. Buy the dips near support with a tight stop and ride the breakout. Sell setup. Entry zone. Between $4,010 and $4,020. Stop loss. Above $4,035. Targets. $3,985, $3,960, and $3,940. Trade logic. Short near resistance if price fails to hold above the upper red zone. Remember, this is a range trading environment until we see a clear breakout. Avoid chasing moves. Instead, react to price confirmations. 7 Short-term sentiment market psychology right now is dominated by uncertainty and patience. Institutional traders are waiting for macro data before pushing gold higher or lower. Retail traders, on the other hand, are actively scalping within the short-term range. Gold often behaves this way before major news or a Federal Reserve announcement, tightening in range and then exploding in either direction once clarity appears. The smart money approach is to let the breakout happen and trade with the direction of momentum, not against it. 8. Maximum potential for next move. Based on current price structure and volatility history. Maximum upside potential, 4,120 to 4,135 zone if breakout sustains above, $4,080. Maximum downside potential, $3,925 to $3,910 zone if breakdown occurs below, $3,950. Beyond these zones, gold may pause again before the next directional push. 9 Psychological levels and trader triggers. The key psychological levels traders are watching: $4,000, major round number resistance, $3,980, crucial intraday support, $4,050, bullish trigger for momentum buyers, $3,950, bearish trigger for momentum sellers. Once the $4,000 barrier is convincingly crossed, gold could attract fresh long positions and short covering, adding momentum quickly. Closing outlook. To wrap up, gold remains in a sideways to bullish bias short term, but still sensitive to macroeconomic cues. Expect range-bound trading until a decisive move occurs beyond $4,010 or below $3,975. If you're planning your trades for Saturday, focus on breakout confirmations, maintain disciplined stop losses, and avoid emotional entries. Gold's structure still favors buyers on dips as long as the price holds above the $3,970 to $3,980 region. The next week could open the door for a fresh rally if global sentiment remains supportive. Remember, in gold trading, patience often pays more than prediction. Watch the range, follow the flow, and respect your risk management. Summary of targets. Buy range, $3,985 to $3,990. Sell range, $4,010 to $4,020. Upside targets, $4,045 to $4,080 to $4,120. Downside targets, $3,960, $3,940 to $3,910.